Good afternoon. Nedbank says it expects to meet its 2023 profit target a year ahead of schedule and has reported a 114% rise in earnings. The bank has resumed paying dividends thanks to lower impairments, a recovery in its non-interest revenue growth, and a strong focus on lowering costs. For more, we are joined by Mark Davies, who's the Chief Financial Officer at Nedbank. Mike, thank you so much for your time. How would you characterize the year that was for Nedbank, especially when you look at your current performance versus guidance communicated to the market?
Yeah, so good afternoon. It's certainly been a difficult year for us and a number of our clients. Having said that, obviously, the bank's generated a strong return to profitability or strong increase in profitability as demonstrated in the jump in headline earnings, obviously driven by a number of benefits across multiple lines in the income statement. You referred to significantly lower impairments, higher revenue than we had certainly expected, and well-managed costs. So certainly a tough year, but certainly a far better year than 2020.
When you look at the data that's coming through, especially from Nedbank's perspective, in terms of your clients and their behavior, what sense are you getting from them in terms of the appetite for credit and deposit growth, etc.?
Yeah, so I would break that into the wholesale segment versus retail segment. If you look at 2021, we continued to see growth in retail or household advances of around 7% through 2021. However, if you reflect on the wholesale parts of our business, we saw negative growth in the first half of 2021, but pleasingly saw subsequently strong growth in the second half of 2021. So certainly in the first half, large corporates were using excess cash to essentially de-gear or to repay facilities, whereas in the second half, we have seen some growth in the corporate or wholesale segment.
On that note, then, when you look at the divisional performance of Nedbank, which one was the standout performer and which division still, I suppose, needs a little bit more focus within the team?
Yeah, so pleasingly, all of our clusters actually perform well. So our RBB generated ROEs just below cost of equity, so nearly getting back to a positive economic profit position. CRB and Wealth both generated ROEs well in excess of cost of equity, which obviously suggests positive economic profits. And then now our Nedbank Africa regions, I would suggest, is the area where we're seeing signs of positive change or strategic execution that's translating into higher levels of profitability, but generating ROE still well below cost of equity, but certainly a lot better than in 2020.
During COVID, especially during the the heightened lockdowns in 2020 and somewhat 2021, there was this massive drive to move clients and consumers to more of a digital platform in order for them to interact with various financial institutions. What are you seeing there when it comes to, I suppose, the appetite for consumers to continue in that mode of interacting with Nedbank on an app point of view or digitally?
Yeah, you've seen a significant migration to access Nedbank product and service from digital platforms or digital channels. Obviously that's been supported by our migration towards building out digital platforms, and you referred to our apps. But certainly we've seen a strong appetite from all of our clients to migrate towards these particular channels to access product and service. And on the opposing side of that, you've seen as a result a reduction in teller activity. So as our clients spend more time engaging the bank through digital platforms, they spend less time in branch. So yeah, we're certainly seeing that trend play out.
From an operating environment point of view, what's your assessment of it, given what's happening globally? There's quite a lot, I can imagine, for somebody in your position when you come in the morning and the screens and the news that you get to, consume. What is happening from your point of view, and how are you seeing that operating environment impacting Nedbank, if at all?
Yeah, so I think the operating environment was certainly impacted by the negative base effects of GDP having contracted 6.4% in 2020. So, we were going to get a bounce in 2021, and you saw that through stronger GDP growth and stronger operating environments in 2021. However, looking forward, into 22 and onwards with the more recent global developments, obviously, particularly as it relates to Russia and Ukraine, and the consequential impact that is likely to have on global growth, interest rates, and inflation, that is likely to adversely affect any expectation around a stronger operating environment in 2022. Prior to these events, we are expecting 2022 to see GDP growth of around 1.7%. So there's downside risk to that number. And then when turning our focus towards, local, we need higher levels of structural reform, policy certainty, energy certainty, and rule of law in order to support local GDP growth. And, that's going to have an adverse effect if we don't get those right from an operating environment perspective in 2022.
Mike, thank you so much for that. That is Mike Davies, who's the Chief Financial Officer at Nedbank, that particular bank reporting their earnings, share price up 4%.